This one's for fiscal philosophy. Shout out Fiscal, but not the lady boys. I don't tote that. Where does Danny get his money? I love to eat honey. Where does Danny get his money? I love to eat honey. Where does Danny get his money? I love to eat honey. Where does Danny get his money? I love to eat honey.
I just exploded.
Hi, you Dividend Warriors. Welcome back to Saturday Night Live.
The reason we know how to use margin because we know how to use margin. Because you don't know how to use margin, but don't put it on us. Don't even ask us questions.
Oh, I got a troll on one of my YouTube channels.
At least I got some allies here. Ryan, why don't you pull up Amazon's margin real quick? Well,
We have to have you.
Is that somebody's vibrator going off? What is that?
I thought it was yours. Nap erosion, cap erosion. Who give a flying fuck about that shit?
why do they gotta be haters for everything?
Hello, everybody. It's Saturday. It's 8 p.m. Eastern. And on Saturday, 8 p.m. Eastern, you could be doing a plethora of activities, a plethora of discussions you could be having with people, a plethora of stocks you could be discussing. But more importantly, some of the activities in general you could be doing at Saturday, 8 p.m. Eastern. Fiscal, what are some of these activities? And especially on a night or tonight, we're talking about more of a risky topic, fresh off monetization. What are some of the things you could be doing Saturday, 8 p.m. Eastern?
Well, not to be overly topical, but you could be packing a bowl, rolling a spliff, maybe smoking a J, something along those lines. Maybe eating some edibles and some of the famous munchies, which we'll get into a little bit later, I'm sure.
Yeah, definitely not good. I was thinking you could be going outside if you're a local cannabis retailer. Certainly not a Canna Cabana, and you could be looking for a particular woman of the town, if you know what I mean, and potentially offering her some dollars that you could rather be investing in a high tide, or number two, you could be buying $2 channel memberships with that money. And you're giving that money to her to do some pretty sinful activities that I'm not going to get much deeper into, but it's certainly not stuff that we tote on the Cash Flow Kings.
Absolutely not. And as you know, that $2 gets you the best possible value you can imagine.
That's absolutely true. And we're not going to show it a whole lot tonight, but we are currently 7 members away from our goal of 20 by the end of 2025. We don't get paid a lot on the Cash Flow Kings. Obviously, to quote the man from above, Dividend dude, we don't do it for the money. But with that said, we will take it. We have taxes to pay. We have accountants to pay. We have expenses here on the Cash Flow Kings, but we'd appreciate it if all you need is a special like button. That's all we need. But welcome in, everybody. It is none other than the beloved High Tide Roundtable, the annual quarterly High Tide Roundtable. And, you know, it's probably the most favorite episode that I do yearly. And I think to kind of reflect on how far we've come in just under a year, we're going to look at the stock price from when we did our first High Tide Roundtable to our second. So when we did our first High Tide Roundtable, it was in July of 2024. The stock is up around 30% since then. And then the last one we did was actually in September, and the stock is up around 50% since then. So you could have some real generational wealth if you would have just listened to our non-financial advice on the Cash Flow Kings High Tide Roundtable.
Very true. Hey, that's value, ladies and gentlemen. That's positive cash flow.
That's absolutely true. And before we let our special guests in here for the night, I would like to make one thing clear. The Cash Flow Kings are the #1 channel, the #1 network to go to for any high tide news, any high tide discussion, and any high tide talk. We're the #1, we're undisputed, and the people that come on the show are happiest after, and that's all that matters. But with that said, let's get our guests onto the show. I think to start off, it would be only fair to have Blake Downer, who is the official High Tide cult leader, Fiscal's long lost brother. Is there anything else I'm missing?
No, not really. No, not really.
Well said.
High Tide Long-Term Barnacle. I believe in this company. When you guys were listing all the things you could be doing on a Saturday night, you were like listing things that people who frequent this company do. And my first internal thought was all like, oh, I know what I could be doing on a Saturday night. I could be investing in other people's habits.
Well said. Very well said. That's potentially quote of the year. Next, I think it's fair to invite onto the show another High Tide Roundtable veteran. This is somebody who's endured and survived episode 32, the heinous attacks of episode 32. And with the recent spree of Kanye's tweets this week and his relationship with Mike Staff this week, I've Capital Mindset onto this show. Well-known Uber shareholder too. Elf Beauty sold some puts on it this week. Big week for you, Fabio.
Yeah. Well, Uber, I may not be a shareholder soon, depending if the price keeps doing this. And I don't have any shares, by the way, so shareholders a bit misleading. I have contracts, but yeah, same thing.
Fair enough.
All right, and with that said, we have a new edition of the High Tide Roundtable, highly requested, highly valued, and very excited to have him on. And he comes sporting the sunglasses. 5 out of 5 for the night is another MV Cunha. Welcome in.
How are you guys? I'm happy
Very
to be
good.
here with you.
The legend himself. Oh my goodness.
I know.
I
Fiscal
found my
can't believe
glasses.
himself.
I struggled a lot.
I know asking you to come on was kind of a big ask because it's like 3 or 4 o'clock in the morning where you're at, and you're probably going to
No, it's 1 a.m. right now.
stream.
We
Okay.
appreciate your sacrifice.
Yes, we
That's
appreciate
right.
the
Yeah, I could
sacrifice.
be
and-
doing all the things you said, like Saturday at 1 a.m.
Yeah.
I really could, but it's okay. I'm here to talk about one of our favorite companies ever.
and you're in Portugal, correct?
Yeah, Portugal.
You could be doing some heinous things in Portugal right now.
Yes,
let
I
alone
could,
America.
man.
Some heinous
cheap.
things. Not good, that's for sure. With that
So
said,
we've all heard how we found this company, Cunha, but I don't think any of us have heard how you first discovered High Tide. What were your initial thoughts? How have they developed over time? Stuff like that.
So to be honest, this year, this month in February, it marks like 4 years since I started investing in HITI. At that time, to be honest, I wasn't really that good of an investor. I invested basically because of the thesis of just going long cannabis stocks because of Biden and all that shit. So I was just like, oh, these guys seem to be doing better than all the other shitcoins like Canopy and Tilray and all those garbage stocks. And I was like, okay, these guys deserve a chance. But then, I mean, they started to execute like every single quarter, like more than or better than I was thinking they would. And I just like started to be attached to the story and to Raj and to all what they were achieving and all that. And I was becoming a better investor, and the stock was getting cheaper because let's be honest, when we got in, some of us got in at some of us got in like 4 years ago, as I was saying. And I mean, looking back, it wasn't cheap at that time. I thought it was, but that's exactly why I said I wasn't that good of an investor. I was just full of hype with like Biden supporting cannabis and all those lies. So I got a bit eluded, let's say. But then, I mean, the story started to roll out like insanely well. And so I just kept dollar cost averaging, and it became my largest position. And at some point I was all in HITI because I mean, I started I'm 23 and I started investing at like 18 years old. So I didn't have much cash at the time. And it was more not when I started to invest, like it wasn't straight to HITI. I started with dividend stocks, like probably most investors start. And I was like, okay, I'm not going to invest in dividend stocks with 2,000 euros. Like, why the hell am I doing this? Like, I'm receiving like 2 cents per month in dividends. Like, I should look at some specs and like those EV specs and all that shit. And I learned a lot of lessons by getting burned. But fortunately, like as I said, I didn't have much cash, so I didn't lose much cash. And as I was like growing my cash pile and learning more, I started to just DCA like in HITI for a while. Like during all the bear markets, I was just buying HITI shares like monthly or something like that, because I wasn't really seeing that many opportunities in terms of low downside. I mean, I thought it was low downside, but it just kept going lower. But it was okay because I mean I understood the thesis. I understood Raj and Raj's vision and all that. So yeah, I just kept doing it. And then the second stock was HIMS, which is performing quite well. I built a position like just with HITI, like HITI 65% and HIMS 35% and something like that. Then it evolved from then, but yeah, that was more or less it.
I know a big part of your investing thesis is you nowadays you have sort of clarified what you're doing. You're hunting for founder owners who have a lot of ambition. That's the gist of my impression of what you've been doing.
Yeah, mostly I'm focused on founder-led stocks. I mean, it doesn't have 100% to be, but right now, yeah, all my stocks are founder-led, and with the founder being the CEO and the largest individual shareholder. So I really value like the management team and having skin in the game. And especially if you see like my 4 positions, the founder and CEO has like 80 or 90% at least of his net worth attached to the stock. So I mean, it's impossible for them not to want the stock to go up. I mean, we all love money, and those who say they don't like money, they're lying. They like at least what the money brings to them. So that's more or less it.
Well said. Yeah. If it makes you feel better, in 2021, I did buy Target stock at $225. So if it makes you feel better, you know, we were all there. And Fiscal also bought MPW pretty high too. So
yeah,
I got wrecked on lows in 2008. Like we've all been there. Everyone's had
I mean, one. It's what you learn from it more than anything.
Exactly.
Well, I think to start off the roundtable, I think it's only fair to go around and share everybody's updated allocation to MP or to High Tide currently in their portfolio. Fiscal, would you like to start? And we'll go from left to right.
Yeah. So right now I'm at 5,000 shares, which it looks like is just over 10% for me right now.
Like that. Blake, you're full ported, obviously.
Yeah, it's like somewhere between 95 and 97% of my portfolio. The problem is the other position that was 10% just keeps on eating losses. And then High Tide keeps on growing. And so when that happens, whatever's going on, that other 10% just keeps on getting drowned out by the 90% that's doing really well. Yeah. So I would say it's a little above 95%. I haven't checked, but it's probably pushing 10% of my net wealth, something like that.
Yeah, it's a big thing to note. We mentioned that last roundtable, but he's not like his entire net worth is not in High Tide, everybody. No advice here.
I'm actually seriously considering taking some of my net wealth out of real estate and putting more of it in a High Tide. And I might go up to 20%. I might go up to 30%. I need to explain the concentration risk to my wife and make sure that she's clear what could happen and what a 30% concentration really means. And then I'm probably going to go ahead and try to talk myself into doing it. We'll see.
That is the most badass thing I've ever heard in my life. That is awesome. And hopefully after the roundtable, she can watch the roundtable and she'll be convinced.
Oh,
MV,
she has just as much conviction as I do. She hears me talk about it all day long.
MV, what's your allocation?
Right now I'm at around 29-30%.
Like that.
Yeah. He's where I want to be. Yeah.
Mr. Fabio, you can go now.
Yeah, so I'll say for shares I have 4,273 shares, and then on the contract side I'm at 25 cover calls, 4 sold puts, another 4 sold puts. And as far as percent allocation, I went ahead and did that. I have a lot of room to add, and I'm going to be adding more, but it's sitting at 0.54 right now.
There you go.
Capital, I feel like you really liked what you heard about this Germany thing, and I feel like we're gonna talk about Germany tonight.
Yeah.
Oh, we will.
I increased my allocation a lot right after hearing about Germany. So yeah.
I am currently. I'm gonna get the High Tide cult is gonna come after me for this. I'm only like 3 or 4% allocation wise. I own around like 470 shares, but it's definitely getting up there. And like anytime there's been a dip, I've been adding pretty heavily. So, and Uber's also done pretty well for me. So there you go. Do we want to start off with Germany while we're on the topic?
Sure. So High Tide bought 51% of a German company with an import license. I want to say they paid about €6 million or something like that. I did send you a link.
Yes,
with that in there. And I think this is a fantastic opportunity because they already have a relationship with all of the growers in Canada, and Canada has the cheapest wholesale cannabis, and Germany has ever growing demand. So it's looking like this is going to be sort of a Wild West phase that Germany's in right now, where all of the pharmacies and stuff, they're thirsty to be able to get stuff on the shelves. There's higher demand than there is supply, and it's been like that since sometime last year when the laws changed in Germany, where doctors are allowed to hand it out prescriptions for basically any reason, and so it's up to the doctor's discretion, and the rate of people with prescriptions has just gone up dramatically. So even though it looks like they're, because of how Pillar 1 and Pillar 2 are looking, and the phases and the rollouts and everything, High Tide cannot yet open up stores. Not their style of stores. We can talk about them maybe opening up ancillary only stores. That would be a great way, in my mind, for them to get their foot into Germany, open up like a dozen or so places that just sell ancillaries. They don't sell concentrates. They don't sell flour. And then when the laws change, they can just switch. But I view this as a great way to get in there in a low cost way, right? They don't need to set up a grow facility in Germany. They don't need to do much. This is going to be another asset light revenue machine, right? And a big part of what they need to do on the other end is hire a whole bunch of really high quality salesmen in Germany to get out there and hit the pavement and form personal relationships with these pharmacies, get to know the owner on a first name basis. Become a dominant player in the wholesale market.
Well said. One of the interesting parts that me and Fiscal were kind of discussing is potential like logistics and kind of like data advantage they could potentially be having pretty early.
They do have an information advantage over everybody else because their data program, it casts a really wide net on the consumer. And so any sort of changes or shifts in consumer habits, Raj sort of has that like firsthand right off the bat. He's got access to that information before anybody else does. The entire management team is more well informed than most of the rest of the industry because of their Cunha analytics.
Fabio, do you have any thoughts on the Germany entry?
Yeah, the majority of cannabis, or at least a good portion, I can't recall if it's actually the majority. I think it is the majority. I'll go with the majority for now, and you correct me if I'm wrong. Comes from Canada, correct? And so they already have that relationship established. So I imagine a lot of this due diligence came about from both their business dealings with the company, and Raj has been going frequently back and forth. You shared a podcast where the executive went on and discussed how Raj and him had kept going back and forth between Canada and Germany. And so what I look at this acquisition is they pretty much paid table stakes for it. And then they get a bunch of licenses that they don't have to really fight for. Really, it's just about the threat of change in administration in Germany that may or may not reverse some of the progress that's been made. But the capital at risk for High Tide really isn't that much, in my view. And when we look at not only that, the valuation they paid for it, so just ignoring the nominal value that they paid, but relative to the EBITDA that the business was generating was actually quite fair. So can't really complain about it. I think it was a smart move.
MV, do you have any additional thoughts?
Yeah, I think it was more or less what they said. This is kind of a low risk, high reward opportunity for High Tide. Low risk, not what he said is really true. Like we don't know what's going to happen after the elections in Germany, and a lot of people are saying, oh, they might reverse everything and all that. But still, I mean, I think that's one of the reasons why Rash decided to buy just 51% and like keep an option to buy the rest in the future. Not only because of that, but also because of everything else, like the risks involved and all that, to protect the capital, let's say. and this is a huge opportunity because it might unlock operating leverage that would take years to come, like through the core business. Like we all know, bricks and mortars are like performing very well, but the gross margins are low. I mean, it's a retailer, it's normal. It's like 26-27% gross margins is really not very attractive for most investors. Most investors just look at that, and even though HITI is printing free cash flow, they just say, okay, but just a small twist to this and they might be burning cash again or something like that. And according to Rash, Pure Can at like 30% EBITDA margins, and that's absolutely insane if you compare that with HITI. And it's something that even if those 30% slash to 20 or even 15% EBITDA margins, it would still be very creative. And for the cash they paid, it's really a steal. And based on the positivism of Raj during the earnings call and all that, and he said he's talking with suppliers and everyone is really wanting to do business with HITI in this regard. If they manage to grab just even if not that high market share from the medical cannabis market in Germany, they will really bring much more EBITDA, which will, in my opinion, bring more attention from other types of investors. And we saw that just with our cannabis. Like they just reported a very good quarter, and it was mostly driven by exports of medical cannabis to Germany, Poland, and all that. So I really think this is a good opportunity to bring other types of investors that were initially just discarding HITI at the first like 5 minutes of research, but now I think there will be like other parts of the ecosystem more attractive to other investors, retail or institutional.
You touched on something there that I want to bring up. I agree. I think it was a right-sized acquisition. And if you look back at the history of the company, and I know, Cunha, you watched this happen too, they bought some really high-margin CBD companies, and it was a big purchase. And then within a year, the demand for CBD for the entire industry crushed because of inflation and stuff. And so that at the time they made the purchase, it looked pretty good. But a year later, it did not look so good. And anytime you're making a purchase like this into what is theoretically a highly synergistic thing, it's going to help your business model, all that, you have to make sure that it's also a right-sized acquisition. And I do think that's a lesson that Raj learned several years ago when the CBD incident happened. Even though it was synergistic and it was a great choice at the time, it just did not turn out well. And the problem was that the purchases were significant. If they were small, like this one is very small compared to the entire size of the company, the risk would have been very low of this one segment failing. No big deal.
Exactly.
I think the same, because I'm seeing it in the comments too. Just to clarify once more, I think this is the 10,000th time Blake and I. HITI doesn't grow the product, so because a lot of people, and this happens also. I mean, online, I saw that you had a little bit of a back and forth with someone who was talking about another stock, some grower, and then you were like, "It's not a grower." So. It's a shower.
Fuhat has challenged me.
That's not good.
So Fuhat is down there in the comments, challenged me to name a book on my bookshelf. Let's go with this one right here, Monish Babraya, the Dondo Investor. So let's talk about this company in the framework of the Dondo Investor. This company is both a cloner and a spawner, and those are terms that Monish uses to talk about how the company generates new revenue and meets into new markets. So you look at like Microsoft, they will purchase competitors with up and coming rising things, whether they're purchasing Excel or Word or whatever. They have a history of just buying competition before they become a problem. Whereas if you look at like Amazon will throw money at new developments, new spin-offs, right, to help and synergize with the primary business model. And you can look at Amazon Web Services as an example of how well that can go for a company. So this company is both a cloner and a spawner in the sense that they both develop new products and they purchase synergistic things that already complement their business model. and they try to do it in a way that is risk low. You end up hunting for high reward, low risk situations. Specifically, this PureCan situation is a high reward, low risk situation. They're not paying very much for the company, and they have the ability to grow the revenue rather significantly. Like I feel like it's going to be quick. 2, 3, 4 years from now, we're going to be talking about what a great acquisition this was. I know, Ryan, if you go into the Discord, the pictures I sent you, the third or fourth thing down, Raj gave an interview on the 5th, like just 3 or 4 days ago, to the Cannabis Investing Podcast. Yeah. So the top comment, he was making a comment to her, pointing out to her how this company is repeatedly undervalued, underestimated. It's the underdog. It is constantly flying under the radar. And he cites that his company has beat estimates for 10, 12, 13 quarters in a row. And it really does vary, which analysts you're listening to and stuff like that. And part of this is because Raj will repeatedly, like Babe Ruth would point at the fence and swing for the fence. Raj will point at second base and then smirk and swing for the fences anyways. That's sort of his MO. He aims high, and then he tells you he's sort of, oh, don't worry, I'll do well, I will do well, and then he swings for the fences. So the second statement that he made here, he talked about how he acquired it. Ryan, can you zoom in on the bottom 2 paragraphs there? Make those a little bit bigger.
Yeah, I got it.
He thinks he can take their revenue from 15 million to north of 50 million in the not too distant future. And even if gross margins collapse with this, even if they're only 20%, we're still looking at something where theoretically the profits out of this segment, maybe 3 or 4 years from now, are going to be worth more than the entire purchase today. So I find that very attractive. If that comes to fruition, I want to be here for that.
Yeah. And even if they don't hit that, as you said, it's swing for second base.
Well, I think he's not aiming for 50 million. I think he's aiming for much higher. But he's going to use 50 million as a milestone. Hey, I got here, feather in the cap. Look at this accomplishment. We're doing 50 million now. Sort of like how for many years he had the goal of 150 stores, and as you can tell, we're past 150 stores. He didn't stop.
Blake, I have a question for you. So we had Brett and Ryan from Chit Chat Stocks on.
Yeah, I watched that. It was a good episode.
And one of the concerns that Brett had was a bit of the frenzy of spending that Raj had when it comes to acquisition in 2021. Would you like to potentially respond to that? Because I immediately thought if Blake was here, he'd have a...
Yeah. So I would say that at the time they were good decisions, right? You do the best you can with the information you have when you do, right? So it looked like these were ultra high margin acquisitions. It looked like these were easy hits out of the ballpark, so to speak, easy home runs, right? And what happened was they were too large of purchases. Nobody really knew that inflation. I mean, I was screaming about what the Fed was doing at the time, but for the most part, nobody really knew what inflation was going to do. And there was when he made the acquisitions, it hadn't really reared its ugly head yet. The central banks were all overprinting, and we weren't quite in the phase where it was time to tighten your belt and start worry about spending. So I would say that it has more to do with learning for Raj and the management and stuff. They learned that lesson. Don't take too big a risk any one step, right? Dip your toe in the water. And we saw that he proof that he learned that lesson, right? Queen of Bud acquisition. They make the Queen of Bud acquisition. They come out with all these branded products. What happens? They sell out. Why did they sell out of every single Queen of Bud thing? It was probably because they decided to have a limited run because they didn't want to put too much risk on the table for the first run of their first brand, right? They wanted everything. You'd rather have everything sell out than have to deal with inventory, right? You have to deal with stocking it on the shelf, clogging up space, all that stuff. So he intentionally chose the cautious approach. And I think that is just one more indicator that lesson was learned, right, years ago. Do not take too big a risk on any one thing, right? He can afford to do that as the company synergizes out and develops or purchases, right, additional revenue streams. Each investment the company makes, each individual risk should be kept very small in on purpose. And then if it really is a synergistic thing like this PureCan acquisition, you will be able to ramp up the revenue and ramp up the profits out of it. And I think another thing I really like about it is the 49% shareholders that the original owners still have, because they are incentivized to work really hard on their end, because the second half of that purchase is going to be made off of in accordance with some sort of a ratio they worked out based off the profits that the company is making at the time. So 2 years from now, PureCan could be making a whole lot more money with help from HITI. And the current owners who own 49%, they're incentivized to help this process along, to help PureCan make as much as possible, so that when they sell the other 49% to Raj, they're going to make the biggest pile of cash they can.
I could also add here that like the CBD acquisitions, looking back, you can see like based on the impairments, based on the numbers, based on everything, yeah, they might have paid more than what they should. But if you check like the history of HITI and everything, you point like regarding the core business here, you point like to the best decision ever, the launch of the discount model program. And the acquisitions at that time allowed HITI to have much better consolidated margins than competitors, and that it was exactly that allowed the company to launch the discount model program that now is a tremendous success. And if they didn't have those CBD brands, which at the time were having like pretty good margins, they simply couldn't do it because they would go bankrupt by selling cannabis at a loss. And it was that period where they could still be getting like a good EBITDA from those CBD brands, because I mean they acquired them, and for at least a few months they were having good numbers. It was after like inflation and like starting in 2022 that they started to be an hurdle for the overall profits and overall company results. So at least they were really important in launching the discount model program in the first months. And that was what made the company jump in terms of economies of scale, and what made them afterwards like be able to sell cannabis so cheap, because otherwise they would never be launching a discount model program, and they would never be like where they are today. So in the end, I agree that it was at least some of the brands were not needed. Absolutely, I agree with that. But first, as Blake said, it was a learning process for Raj. And second, without them, I really doubt that HITI could have such a successful discount model. And it was that allowed HITI to reach this point of success.
And the same with the websites. In addition to the CBD companies, the websites were very profitable for such a small investment that HITI made in them. They for a year or 3
years, and mostly paid with shares. And at the time, the shares were,
and they generated a bunch of cash. Yeah, and they helped the company out through that period where gross margins were crushing because the adoption of the discount model. That's so true. Yeah.
And the KPI I'm keep paying attention to is the elite member growth. I mean, we saw 28% growth sequentially. And did you guys see the international? Which it's nothing, but they got 3,000 members.
Well, those 3,000 members, all they can purchase is like ancillary support products. Like they can only purchase like glassware and vape pen, empty vape pens and stuff, like batteries. You can't purchase like flour and concentrates on the websites. Like I don't think so, unless you live in Canada.
Yeah, that's what shocked me. I was like, people
actually all those people are like, yeah, I want the great deals on bongs. Like how many do you purchase? like so, that you want to
collectors
for that. And I think this is also like what we're really seeing is those 3,000 memberships. All of those are people that own like stores, and to them it's like, well, this is a no-brainer. They'll just buy the elite membership, and the 50 bongs that they buy every month, now they're at an even better price and their margins just improved.
This is a fun fact thrown in by well-known high-tide enthusiast El Guapotron. If you own a dab rig, and I don't even know what that is, I'm not going to try and guess. You spend around 42K on cannabis products in your life.
Yeah,
probably put that in.
So the type of customers that are willing to buy the really high end equipment, they also tend to purchase a whole lot of the consumables.
Oh,
You don't
if you
say.
can form a relationship with those type of customers, those are your ideal customers. You know,
very
the people
sticky revenue.
that they wake up every morning and they get like 2 jumbo latte coffees. You know, those types of customers.
I see. Yeah.
Mm.
Becky's.
Somebody wants to know about why the glasses.
Why the glasses?
Because
I
it's
don't know.
confirmed, and there's a tweet you can find where Raj Grover, CEO of HITI, confirmed that he loves sunglasses. That's why.
Yeah, and we're doing anything to get our chances of getting him on the show sometime. He said no once, but one thing about us here on the Cash Flow Kings that me and Fiscal take pride on, if no, sometimes no doesn't always mean no. So you know we keep back and keep fighting on. Oh God. Okay. Next topic though. There's a lot of people watching the show today that are on the fence of buying High Tide or like want to be convinced to buy High Tide. I'd like all of us to get a bit of an elevator pitch and if possible, try not to say the same thing. Obviously it's a great company and all, but you know, spin it off a little bit. Fiscal, do you want to start?
Okay. So what you have is both a grower and a shower from a financial perspective at a relatively cheap multiple. And you have the goated CEO of all time, Mr. Raj Grover, at the helm. What's not to love?
Well said.
Let me go last.
Oh, okay.
Yeah.
We'll go with MV then.
I mean, let's see. You're buying a company in a sector at the peak of pessimism that's still doing absolutely great for years during all the times where every cannabis company was a shit and with terrible results. You had iTide reporting every quarter a record in every KPI that you want to see being a record. And just imagine how the company will do when the market starts to rebound seriously. And then you're buying at 7% free cash flow yield. The founder is the CEO and the largest individual shareholder. And now I can't say that he has never sold a single share, but he just sold like 2% of his position to pay taxes. So,
and he disclosed why.
Yeah, I mean, feel free to sell, Raj, like pay your taxes.
Yeah.
But here you just have the possibility of buying a business that will continue to grow in Canada, like domestically, and will be able to expand its proven business model in other countries that are still not like developed in terms of cannabis, and Canada is like for over 5 years. So Raj and even the struggling players in Canada have more knowledge than like most US companies and even in other countries, because they really don't know the dynamics of the cannabis market, even though they think they know. They really need to face a price war first to understand what's going to happen to them. And then you have the mindset of Raj, which is to not stick with the core business and try to find other ways to bring the ecosystem and to unlock operating leverage in the course. And so I think, in my opinion, and I'm an investor which only invests in small or medium caps, or in this case, a micro cap. And in my opinion, one of the most important value drivers is management. And here you have the best management in the sector by far, in my opinion.
Well said.
So I'll avoid talking about the management. We know the management's good, as the other gentlemen have all said. So, but the other part you're kind of looking at, and we're seeing it still in the chat, is that there's really a misconception or misunderstanding that continues to fester with High Tide. I believe you have to look at High Tide as simply as a retailer. That's all it is. It's lumped in, and thankfully, I think that's why you have the opportunity. There's plenty of examples within various case studies of various companies like Walmart, Dollar General before the recent fall, where retailers can actually be very good performing stocks. Home Depot, Lowe's, etc. So those are the large players. No, Target's trash. I'm kidding. I'm just joking.
That's fair.
No. I'm joking. So retailers can be great investments. It's about getting them before you realize what they're going to become. I keep seeing arguments and discussions about the price of cannabis. It's like, that's not, you're still looking at it as a grower, and it doesn't grow any cannabis at all. They're not exposed to the price per cannabis. They're grower agnostic. So it doesn't matter who's growing the product. And it's just the same exact analysis you would apply to any other retailer. You should be applying to HITI. So sales per square foot, their inventory turnover, etc. And then the other KPIs that are basically telling you at least what the value proposition they're offering is, like their elite membership. And as you see, there's no deterioration since they've launched it. It's in fact growing very nicely. And so as I keep seeing that KPI grow, that's telling me how loyal are the members. And if we don't see any deterioration there, I don't really see a reason to fret for that. Another thing is that they've occupied a lot of the, let's say, attractive real estate over the years with their acquisitions. That's like something that Blake was hinting at earlier. And within this space and within retail as a whole, it really is a location game. There's also a scale advantage that you achieve that High Tide has, where the players that they're facing against, they keep going bankrupt time and time again. That should be telling you something, that they have achieved something the others do not. And then getting into the valuation, yes, they trade at a high free cash flow yield. Again, people keep, for whatever reason, doesn't matter how many times we say it. I have no idea why. Like, I feel like we're talking different languages now. You say the following, that it's a retailer, and then they immediately go to arguments about why weed's a commodity and weed's growing. And it's like, okay, that's not what any of us are arguing. And they kind of can't get in or realize that it's a retailer. So that presents the opportunity, and that's the re-rate possibility in the future once the market kind of realizes. But for the time being, you don't have to rely on the re-rate. The re-rate's a bonus. For now, what you kind of get is, if the free cash flow is growing up and to the right and you get multiple maintenance, then that should be already a relatively attractive rate of return. Then the projects outside of the United States, I looked at the numbers. It doesn't seem like that even needs to work out with just the market opportunity in Canada, which is hilariously not that big when you consider the global opportunity. For example, if the United States were to open up, and that's an if, it doesn't need it, but if, then we're looking at a very large potential opportunity. But a lot of people also get stuck on that fact too. I can't tell you how many discussions I've had with people saying it's never going to get opened up in the United States. I'm like, so Canada just doesn't exist. Like, Canada is just an empty wasteland where there's no one with any money and people don't buy anything. When you look at the market opportunity just in Canada, they still have to fulfill the total potential there before we start worrying about the United States. So that alone already kind of makes it a fairly attractive proposition. And then with the potentiality that they can open up in the likes of Germany and in the likes of the United States eventually, then that's something you can kind of say, okay, if that happens, I'm going to be extraordinarily rich, versus if they just fulfill what they got to go in Canada, then I'll do fairly well in this investment. So that's my elevator pitch.
There you go. Very, very well thought. I'll try and follow it. To top off the United States thing, I'm going to make an analogy here, and this could get us canceled. Raj Grover right now is presented with an option. He can rather, in front of him, he has the school slut. Okay, she slept with half of the school. That's the United States right now. If he wants to get with that, it's not going to be very accretive to his lifestyle. Raj Grover is saying no. It may feel good for 15 minutes. I'm not going to do it though. He has said repeatedly, like, we're not going to go in the United States if it's not going to be accretive for the business. I think I can really respect that. On my elevator pitch, you need to, if you're an actual investor and you can kind of get your emotions away from the stock price, I think this is an obvious opportunity. I think if you can find if you can kind of see through the discount that there's always going to naturally be with a kind of a sin stock cannabis play like this, there's always going to be a negative stigma around it. You look at the business model, it's already proven. I think it just makes sense.
All right, you ready for me?
I'm ready.
So for me, maybe a week ago, I was at work, and one of my coworkers asked me, what type of investor are you? And I was like, oh, I'm a value investor. And he's like, okay, yeah, I know there's a bunch of types of value investors. What kind of value investor are you? And I was like, oh, well, and without even thinking, because I could have given him, all small cap, all that stuff. I gave him I mostly just pay attention to incentives speech about how, and many shareholders have heard this. If your incentives are in alignment with management's incentives, that's fantastic. That means management is on your side. The decisions that they're making are decisions that you would have made, those sorts of things. What happens when the customer's incentives are also in alignment with management's incentives? That's where we're at. We have this sort of like unwritten contract where Raj has loudly promised the best selection at the best prices. And as long as the company can fulfill their end of that contract, they have like this Costco contract thing going on where people want to be there, right? People know the deals are great. People want to buy into that. And every time you show up and you get a good deal, it reinforces this psychologically. So revenue is very sticky. Not only are they financially incentivized to come back, customers are psychologically incentivized to come back. And this is also why Warren Buffett and Charlie loved See's Candy, because See's Candy, every time you get the candy, you have this positive emotional experience tied to the chocolates, right? So ignore the fact that this is they're selling a mood enhancer, right? Ignore that, right? They're selling a mood enhancer at a discount. And they're doing it like in a high-end clean environment where you feel safe and the stores are nice and stuff like that. So incentives, right? The stores and the company's incentives are in alignment with not just shareholders' incentives, but with customers' incentives. And that is extremely powerful. And that I believe is why the company repeatedly beats analyst estimates, because analysts look at numbers. They don't look at incentives. They do not know how to evaluate a moat. You go to school for finance, guess what they don't teach you? Moat evaluation, right? How do you teach that? It's abstract. You can't just like pull moat quality out of financial statements. It's not there. It's not described on the balance sheet or the income statement. None of that. So this is part of why, when I invest, I look at moats, right? And I think the real moat here is not the discount model. It's not the it's not the whatever you think it is. It's Raj's relentless drive and ambition. And he's been running this company for like 15 years now. He's had to adapt it. He's had to learn. And like he's cobbled together something very special here. Like I talk about how it's both a cloner and a spawner. And then I ranted about cloning earlier, right? You spin off all these business models and stuff. I talked about spawning earlier. Cloning, this company is a cloner. It copies all of these extremely proven retail, things that work for Starbucks, things that work for Dollarama, things that work for every retailer ever. There's a special recipe there. I think Capital Mindset brought it up. This company has found the secret sauce, right? They have the secret sauce, and it's so hard to turn away from that. And when you combine all of these factors together, where they have this business model that's hyper competitive, they're managed by an above average quality CEO. He's sharp. He's super sharp. He has read many of the same strategy books that I have read about game theory. I guarantee it. I know he has, because he has examined the same sort of businesses that I have examined and the same sort of business model ideas. I would be shocked to find out that he has not read The Dondo Investor, because The Dondo Investor repeatedly talks about looking for high reward, low risk situations as a business owner, and how you as an investor should look for business owners who look for asymmetrical risk reward, and Raj is one of those. Raj is always looking for the good deal. Okay. And on top of that, on top of having the best strategy and the best tactics, he's charismatic, he's sharp, he's a good negotiator. He's sort of this total package CEO that I feel he is S tier. And as long as he continues piloting the company, he's going to continue cobbling on new aspects and new synergies and finding additional revenue. And I think that this is there's 5 types of 100 baggers. There's a speech that Monish Barai gave. I'm going to rant about Monish, I guess, all night tonight, about the 5 types of 100 baggers. This is a type 2 company at the moment. Type 1 companies means that's like a Coca-Cola. The business model is so fantastic, even if an idiot runs it, it'll still do just fine. Okay, the type 2 business models are, the business model is fantastic if it has a good pilot. And we're there. We have a fantastic business model and a good pilot. And I would like to believe that Raj is slowly transforming this from a type 2 business into a type 1. And eventually, I don't know how long, hopefully decades, eventually he'll have to hand the reins off to somebody else. And I'm very curious when that happens, if this company is going to be fully a type 1 business by the time that happens. Is it going to be so rock solid that no one could defeat it? And that, that's the gist of why I'm here is I see the potential. I see massive potential. And it's the reason my conviction is so high. And I think MV Cunha talked about this earlier. I didn't start with this conviction. This conviction was earned. Like I have watched this company do nothing but succeed, do nothing but execute, do nothing but excel. There has been nothing but a steady stream of good news coming out of this company. The only thing that's ever been bad is the share price. That's it. It's just a steady stream of good news. Love the company, hate the stock, whatever. I'll just keep buying the stock anyways. That just means it's on sale. That's a big part of why I'm here. Is it's undervalued. The opportunity is huge, and I believe wholeheartedly in the business model and in Raj and in that constant drive to adapt and to win and succeed. He has it.
Well said.
Do we want to talk rather recent earnings report, or do we want to talk about where you think the stock can go in the future?
We can do both.
We one and the other.
Ooh.
We can do both.
Yeah.
Start with the earnings.
Let's do the earnings.
They were good.
As
Got any
always.
numbers to pull up on FinChat, Ryan?
I could pull up the numbers. Who doesn't love the numbers? By the way, FinChat, new affiliate of the channel, use the link in the description.
When we're done looking at the numbers, the last two charts I sent you, Ryan, were just a chart of margins and then a chart of efficiency. So after we look at numbers, if we could look at those two charts, that'd be wonderful.
All right, everybody, shoot them off. What do we want to look at?
Revenue growth. Start with the top line.
Oh, revenue.
We saw revenue go up a little. We saw gross margins crush a little bit. I'm not panicking. I don't really care. As long as they stay above around 26% or don't fall below around 26%, I'm not going to worry about gross margins. They're still fighting price war. So until more people got a business, even more, right? They're not going to be able to raise prices safely. Yeah. Otherwise, they'll risk not being able to continue to capture market share like they do.
Now, my understanding of the revenue is that it slowed down a little bit while they were focusing on getting free cash flow positive, and now they're planning to reaccelerate. Is that correct?
Yeah, I don't expect to see the same sort of hyper growth that we saw in like 2021 and 2022. I expect to see healthy, sustainable growth as opposed to what we were seeing like 3 and 4 years ago was wild. It was, I mean, I was here for it. I was all about it. Doubling revenue every year. That's fantastic for a retailer.
Would you define that as like something like 8 to 10%, something in that range, or a little higher, a little lower?
So they put up 17% new stores this year. So you look at like the low gross margins and the low cash flow, and then you look at what can they do with this? Like if you only look at the gross margins, right, and you're trying to decide compounding, that's only half the formula. The other half is how cheaply can they open new stores, and then how quickly can those new stores ramp up. And this company is very cheap to open new stores, and their ramp up time is real quick. It's less than a year.
Yeah, and with gross margins can go down, but again, since it's a retailer, we also want to pay attention to the volume of what we're selling. So if you're selling more paraphernalia versus actual flour, that changes the gross margin figure. And then we're going to want to be paying attention to what is that turnover looking like. So turnover is going to be a really important thing you want to look at, inventory turnover.
I think I remember Raj in an interview a few months ago said 16 or 17 days.
That's insane.
It's in the earnings presentation, I guess, or one of the old ones.
One of the old ones, yeah.
Yeah.
That's insane, yeah.
Yeah, the last time we heard healthy and sustainable when it comes to a company's financials, it didn't end up so well. So knock on wood for that.
Don't remind me.
Good intel joke there for those who understand.
I mean, they're not going to double their store count every year.
Yeah. The CapEx it's a little more under control.
Yeah.
Any other financials we'd like to cover?
Maybe the free cash flow.
We love free cash flow.
Yeah, you can do even free cash flow on a quarterly basis. I feel like
Yeah.
that's a good way to look at it. So
Yeah. All right, well,
you can
quarterly.
see seasonality.
So now is a good time. You mentioned seasonality. Now is a good time to point out that every winter demand goes down for this product because Canada winter it's pretty rough up there. So expect to see possibly not hardly any revenue growth, or maybe it might slip back down a little. If you look at what happened last year, take a look at what happened last year. It went down a little. The very next quarter, it went right back up. No worries. It's just seasonality. Every company in the industry in Canada experiences this.
Yeah. Maybe when they get into Germany, that won't be much of an issue.
I don't imagine the winters in Germany are so harsh people refuse to leave the house, as opposed to Canada, where
it's the North Pole.
Yeah.
Any other financial?
It jostles around a little bit every quarter, but it's not, there's no red flags here. And this is during a period when they're spending money opening new stores, right?
Yeah.
So the stores they open in any given quarter, that directly affects the cash flows for that quarter, right? Because they're blowing through CapEx and stuff like that.
How about net cash, Ryan?
Net cash? Yeah. So more of their some of their operational cash flow that they produce from operations is eaten by new store openings, and so their total free cash flow numbers can vary pretty significantly based off of how many stores they're opening.
This is operating revenues.
Yeah, look at how stable that is.
Yeah, this is annual.
A lot of the numerical aspects of this company are very stable. I'm rather shocked, and it might just be because it's a retailer, and like I spent so many years looking at like manufacturers and stuff, but there isn't a whole lot of fluctuations in most of the earnings statements, or most of the numbers off the earnings statement.
Yeah. We'll look at CapEx.
What did the share count do? I have not actually looked at that.
I can pull that up.
I assume it went up a fraction, like 2% or.
Last time I checked it, it went. Let's see. We'll put it on.
They didn't use any of the ATM program during the quarter, at least.
Yeah.
Yeah, I don't see any.
Well, and the PureCan acquisition won't show up until the next quarter, right? Because it happened like 3 weeks ago.
They're probably just in the second quarter, right? So November, December,
This is CapEx. That is quarterly, and this is annually. So obviously,
we got something we've I think.
Oh no! Here we go. We'll dance later, Echoes. But thank you for the $2. Do you have a price target for this stock? This is okay. Yeah. This is the fun part of it.
So I expect Echoes. I love watching you, by the way. I've been watching you for about 3 years now. I expect two things out of this company. I expect them to continue growing revenue, and I expect them to continue opening new stores while staying cash flow positive. I also expect them to be able to compound their store count by something like 15 to 20% every year. Very similar to what we just experienced. If margins get better than that, right, they could compound more like 20 to 25% per year. It is not unrealistic to think that if their spinoffs do super, super well, they might compound, 30, 32, if everything goes super hot and they fire on all gears, we could be looking at something like a 30% compounder-ish. In the meantime, this industry is super cyclical, okay? It is the only thing more cyclical than cannabis is crypto. So when crypto goes into these hot markets and euphoria takes over, all the shit coins go up, right? Same sort of situation happens with cannabis, where when euphoria takes over and everybody and their cousin is investing in cannabis because it's the hot new thing, right? Because remember, this is comparable to like investing in alcohol at the end of Prohibition 100 years ago. This is theoretically huge, right? This is a compound that people consume. Like this is something that this is a massive investment opportunity. So during the last bull run, this company had very low revenue. This company was barely cash flow positive. They did not have the websites. They didn't have the CBD. They didn't have the reputation. They only had like 20 or 30 stores or something like that. Maybe 40 stores. They did not have very many stores. And they reached like $11 a share, $11.50 a share, something like that. And since then, they have tripled their revenue, more than tripled their revenue. They've also doubled their share count. They've also improved their profitability. They've also become the dominant player in their market. They've also proven their business model works. That wasn't true 4 years ago. It was not true that their business model was amazing. It is now. That is true. So what is the price target? Well, the reasonable price target is that I'm expecting this to compound between like 15 and 20% a year. I expect this to beat the SPY. At some point in the next decade, euphoria is going to grip the market, and then I'm going to have a year so powerful that I either get to retire or at the very least I get to brag about it for the rest of my life. And by brag about it, last year I had a 70% return. And that, I think, is going to get blown out of the water by what happens during the next euphoric rally, because this company's top tier and it's dominant. And very few other companies in the industry are also cash flow positive. Very few of them.
Yeah. Can we also emphasize that this has not been a bad performer?
Yeah.
Hey, we have been 15% down since all-time highs, technically.
So Echoes, pull up TradingView and compare this to MSOS. MSOS is the U.S. cannabis index. It's basically like the market for cannabis. If you were going to look at the industry, that's what you look at, sentiment, MSOS. Compare HITI to MSOS and ask me what you think the best company in the industry is. And I rarely say that because I'm a fundamental guy. I look at fundamentals. I don't look at share price and see justification that I was right, although we all do that. But
Yeah.
Can you tell me what happens if I know that you've answered this again, like 10,000. This will be 10,001 times.
Yeah.
What happens if the price of cannabis goes down?
HITI does not care.
We do not care.
I keep seeing this comment.
Yeah.
Again and again and again.
If
And
it
also,
goes down to $10 a pound.
Hans, just for Hans's also other comment. And bro, what about Australia? Australia, bearish.
Yeah.
That's bearish for high tide.
Well, so Australia represents a huge profitability opportunity, even with a 90% tax, because I looked it up in Canada. It's currently selling for $4 a gram, and those are Canadian dollars. So it's like, I don't know, 3 something a gram here in US. So the price in Canada is so amazingly cheap that it doesn't really matter what the taxes are on it. When you go to import it to basically any other country, there's still going to be at least some profit available there. So maybe huge, maybe small, but there'll be something.
All right, I have a very good question. Obviously, MV and Fabio didn't get to the price targets.
Right. I would love to hear their price targets.
Yeah,
or their expectations.
Yeah, the stock goes up tomorrow, or on Monday. The cash flow kings bump, which is a real thing, and we're expecting it to happen again. What would this stock have to go up for you to sell? I see it here. I see it here.
If it went to, I don't know, 15, 20 maybe, I'd probably consider taking my W. If it happened like literally on Monday.
Yeah, I mean, it depends on when. Like, if it happens on Monday, I mean,
yeah,
it would be way lower than like in a few years.
Yeah, but if we're like 5 years from now and it finally reaches 15 a share and the company's significantly larger, like it's situationally dependent.
So that definitely like circles back around to what I would say to the price target question, and that is, if the multiple that you have to pay for it gets astronomically high, but the growth doesn't back it up, Costco, I'd probably let it go at that point.
So at some point in the next, I say this in the next decade, at some point in the next decade, another euphoric rally will grip the entire industry and it'll be super clear. Everybody will be talking about it. It'll be in the news, MSNBC, Fox Business, all that. It'll be all over the place how crazy the cannabis market is. And that is when you should be selling.
Oh,
well said.
I thought the competitors got Blake. Camera went out for a second. So I'll add to that and say, like, when you see the shittiest shitco of the sector, the investors of that bragging and taking screenshots of their profits, it's probably a good time to get out.
Jeremy.
Probably a good time to get out.
Yeah, when Jeremy Lafarve starts talking about what a great investment it is because it's gone up so much in the last year.
When you have the garage growers IPOing and getting interviews on like Meet Kevin, etc., it's time to get out. And they're like, remember Avant Brands?
Mm-hmm.
That's why I'm literally like, he's a garage grower who IPO'd. It's hilarious.
That's funny.
So all the concerns, right, that everyone's saying, it's like a grower is a very tough business.
It is.
I don't even know if the economics will ever make sense because it is a commodity. There's not much specific brand loyalty. So the price targets I have like buy ranges depending on the scenarios, but basically what I'm getting at is if you can kind of expect anywhere between 12 on the low end, 7 on the low end, and on the high end 30, and then weighting the higher probabilities around the 12 to 20%. So you have your little tail end risks, and you could probably say I should price in something like a decline on a tail end risk, but I'm pricing in about 7% growth on the tail end risk on the low side. I get to around a buy price of, this is going to sound awesome, but $6. And so then of the scenarios, which one do I have preference to? I'm trying to make sure that I get it within where I can assume about a 12% growth of free cash flow, which comes to around about $3.21. I think that's a very attractive price point to buy. So, and that includes everything within my strategy, which when I've been selling puts, the break evens have been well in the 2s. And so as long as we're above that, and as long as the break even's there, I'm all game for it. And I can just keep, selling puts, buying shares.
You're doing like covered strangles or something. You are owning shares, selling calls, and selling puts, right?
Yeah.
Okay.
Yeah. So I have, I think I said at the beginning, I have a lot of legs on this, but I think I have like close to 4 legs of sold puts. You've seen it, Blake, I think. Yeah. And then I'll buy shares, and then I'll sell covered calls on it too.
Yeah.
That's so yeah, no, and you get really good premium all the way through. So I get really good premium on the puts, and then I get really good premium on the calls, and then the calls can buy me more shares, and then those shares can in turn buy me more.
So what is it going to take to talk you into selling super deep in the money puts like I was talking to you about a couple months ago?
Oh, I already did.
Oh, okay.
No, I already did. So basically the break evens on the 5 strike were not anymore. I think they might be like close to they should be in the 2s right now. But before they were pretty juicy, and those have done pretty nice. But yeah, I have the 5 strikes. I have the 5 strikes and the 250 strikes that are about to expire worthless.
So to modify, I want to hear all 4 of you. What kind of compound rate do you expect out of this? Like I mentioned, I'm expecting anything from 15 to maybe as high as 32%. And obviously some years will be better than others, but how attractive of a compounder is this company?
From today's price?
What from like revenue and cash flow perspective.
Okay.
Don't pay attention to share price, because that'll happen as an echo.
I'm saying around like 20 to 25%. I could expect
20 to 30%.
I mean, revenue, I would say 15 to 20%.
Yeah.
And I mean, free cash flow, a bit more than that.
Yeah.
Because then, I mean, if you put a bit of multiples expansion in there and all that, you can achieve like way better in terms of stock performance.
Yeah.
To be honest, and to touch on the price target thing, I don't really have a price target, and I see things like, for instance, I just do some quick math, and if it's a no-brainer to me, I'm okay with that. And just looking at numbers, like just very quickly, I could say that HITI is very likely to generate like close to $100 million in free cash flow by like 2030, let's say. I mean, if you run the numbers, it's not really that wild of an assumption. I would say it's a good base scenario, especially with pure can and like entering medical cannabis and all that. And I mean, then you just need to apply the multiple you think it's fair. I mean, you can put like it's a cannabis business, maybe it just deserves 10, or you can say like 15, or you can say, oh, maybe at that time it will be way more normalized and HITI will have like a much more established company and all that. You can put like a 20. I mean, that's up to you. I would say like a 15 times multiple would be okay, let's say. And that would put it at $1.5 billion Canadian valuation, which is like 5 times what it is right now, without euphoria. Because as Blake was saying, I believe we will have a peak of euphoria. Like, I don't know if it's this year. I don't know if it's next year. I don't know if it's 2027. I think it will happen. I'm not investing based on that, not whatsoever. But I think it might really help in bringing multiples back again, even to stupid levels, and I would appreciate that, and I would just sell at least a portion of my position. I mean, it's okay. I'm not going to take the mistake again, like back on the previous bull market in the sector. I was one of the exit liquidity of the sellers, so now I want to be on the other side.
Yeah.
But even without counting on euphoria, I think this might be like a good multi-bagger in the next 5 years. But I mean, who am I? I've been saying this for 4 years. So we'll see. But I think the numbers are really on our side.
As Fabio said, markets are efficient.
Markets are always efficient. There's never ever opportunity. There's never.
It was a little tough for me in like the entirety of 2023. I'm screaming as loud as I can to everybody to buy high tide. Like I wrote Seeking Alpha articles. I raved to my friends and family. I'm telling everybody buy high tide, buy high tide. It was trading at like 120, 130 a share. And it seems like nobody would listen. And then now it's like, now that it's actually had some share price performance, everybody wants to listen. And I'm like, where were you 2.5 years ago when I was screaming about how good the business model is? Right? Because solid business models, they will eventually lead to attractive financials. And this business model is so strong, I could not possibly see the financials not eventually catching up to it.
You got to bring that question.
Yeah, echoes once again. Thank you. What's everybody's average cost?
235.
235. Okay, I'm right around there.
US, just to clarify.
US dollars. Yeah. I am like 229 right now. But
I wouldn't know mine with my contracts, but.
Ooh.
Cunha, what's your cost average?
186 US.
There for a long time, it was at 175. The cheapest shares I bought at $1.04, and those are the shares I'm never.
Yeah, I think it was actually the same price as me.
Yeah, and it was there was an ETF sell-off in March of 23.
Yeah, exactly. And they were unloading the MJ, right?
And I couldn't tell where the bottom was, so what I did was I set limit buys at every penny. So I got a handful of shares at 105, 106, 107, 108, but the cheapest ones I picked up were at 104 that day. And that was the lowest. I keep averaging up, right? As my confidence in the company goes up and as I continue to gain more income, paychecks and stuff, I'm buying more. And so my average is going up. It's around 206 or something, I think the last time I checked.
But Blake, they're not going to legalize in the United States.
Who cares?
Well, Blake, cannabis goes down though.
But Blake, Australia.
Yeah, that's right. It potentially could be a huge opportunity in Australia. I haven't actually looked into it. I heard that tax rate's a brutal thing there. Yeah, but if the customer is willing to pay for it, the tariffs almost always just get pushed on the consumer. If it's a luxury tax, it just gets pushed on the consumer. So what if it affects volume a little bit? You can still make sales to customers that you weren't making sales to before. Australia is a new market, even if it's less profitable because of taxes. Still worth it.
Who cares about Australia?
Who cares about Australia? Yeah.
Has Raj mentioned anything regarding his kind of buyback thesis?
I'll tell you what. If it makes sense for them to do buybacks, I will personally reach out to Raj and pressure him to do buybacks when the time comes for that. Yeah, because I don't want to toot my own horn too much, but if I get loud, they will at least listen. They don't have to do what I say, but they will at least listen.
He follows multiple of us on Twitter. By the way,
follows.
Yeah, we can all tweet him for the buyback.
AMA. Let's talk about the AMA. He's doing an Ask Me Anything. You can ask Raj Grover anything you want. He'll answer like 2/3 of the questions. It's on Reddit. Do you have a link for it, Cunha? I know you and I were both in the Discord when that hit. I could probably find
the AMA, the recent
the
one?
AMA,
Let
because I
me
think it's supposed to be like later this month or something. This is an extremely transparent shareholder, or sorry, extremely transparent CEO. He has also gathered around him management that is very transparent. All of them are willing to talk to shareholders on Twitter, on the phone. They talk to shareholders. I assure you that these people, they are listening to us. They want to hear what their customers want. They also want to hear what their shareholders want. We are a source of ideas for them. Remember, right? So they will be listening to this. So perhaps I should also point out, because I know they listen. Hey, Raj, so your company's grown large enough that you have actual segments. And during the earnings call reports, I want you to spend a sentence or two on each individual segment, even if it's boring, even if it's just to tell me it's business as usual and nothing has changed. Now, let's see if that happens. Let's test my theory. Next quarter, Rob starts talking about every segment. I would love it because the company has to be large enough that that's going to happen eventually.
I mean, if you check the management discussion and analysis, they have all that there.
Yeah.
I think that it just doesn't want people to look at the e-commerce segment right now because it's being so terrible that it just keeps saying, oh, our core business is what matters. Like when an analyst asks like what's happening with e-commerce, it just says, oh, our core business is 94% of revenue, so we don't really care about that. So I think it just doesn't want people to look at it. But with the medical cannabis segment starting to come in, I mean, it will have to, I bet, because every cannabis company does that. Like
I think we reached.
But I mean, Tilray and Sundial are not like in this sector anymore. They're like liquor companies, so they really need to put all the segments.
Yeah.
But I mean, medical here will play a different role, so I think you will start doing that. But regarding buybacks, I really hope they don't do buybacks like for a long time.
Yeah.
And if they just start, if on Monday they released something saying, oh, we're going to buy back shares, I would probably sell a bit of my position, to be honest. It doesn't make any sense, and it would be a terrible decision in terms of capital allocation at this point.
Yeah.
Imagine they buy back one share because they listen to this segment. They just put out a press release.
And they could just try to pump the stock by like announcing a $5 million buyback program or something like that. I mean, many companies did that like in the recent months just because the market is like full of hype and everything is going up. I saw several micro and small caps that some of my followers asked me to review, like to give an opinion, and I just see a company burning cash and announcing a buyback program just because they went public like recently and they still have a bit of cash from the cash they raised, and they're just trying to pump the stock. And I mean, it just screams red flag to me. It's not the case with HITI because we're profitable, but I mean, it really doesn't make sense. But I remember like Raj saying like 3 years ago or something that he would consider paying dividends like in a few years, like 2030s probably.
On the buyback question, I'm conflicted on it because they do have a lot of reinvestment runway still. But however, if they do find that they have excess cash and we think this reinvestment runway is still getting them, in that 20+% IRR, I think you should want them to buy back stock, because then the shares are materially undervalued. I know companies like that look, well, BTI, that's a crime what their management's doing. The fact that they're not buying back stock, or they didn't buy back stock when it was at 28, they should all be fired. And they're paying down debt. You know how low the interest rate is on that debt? But there's not a BTI.
Yeah, we're killed if we talk about BTI, dude.
But no, there's been companies in the past that I'll name a few in case studies. FICO. So FICO has been perpetually expensive for quite some time, and the management was buying back stock hand over fist, and in fact taking out money, borrowing money to buy back stock. And people at the time, and I remember this, were saying, this is crazy. This is absurd. And that was like, I don't know, like 400% ago, something like that. Because people people underestimated the volume increase multiplied by the factor of price increase. So they didn't understand the pricing power that FICO had. The management did. And that's why the management, before they exercised that, they wanted to repurchase shares. So that with high tide, we should kind of be looking at it the same way, I think. But for the time being, it doesn't appear as though relative to their cash position that they have that much excess free cash flow relative to their investment runway. So I think Raj is doing a good thing. The dilution is much appreciated. It's just 2%. Much more handled than it was before. And I think they got to a good momentum, a good cadence at the moment in time. I want to stress it one more time because I saw it again from you, Hans. Philip Morris is a brand. I don't know how many. This is now 10,002. We're on 10,002 times. Philip Morris is a brand. They do not even grow the tobacco plant, by the way. So that's actually someone else, like Universal Corporation. But it's not comparable. You got to look at it as a store. So who sells the Philip Morris branded cigarettes? That's who you're looking at. You're not looking at Philip Morris, my guy.
Somebody also mentioned earlier, they had a question on where does High Tide actually get the flour from?
The growers are desperate to offload it because they operate in a saturation heavy environment where there's too much being grown in Canada, and they're desperate to sell it to any retailer who will take it off their hands.
Yeah.
Back to the dividends thing briefly. The company will eventually reach saturation in Canada, where it doesn't make sense to open up a whole lot more stores. And if new markets have not opened up by the time that hits, that is when you will hear me loudly pushing management to start some sort of a small buyback program. Is when it does not make sense for them to efficiently deploy capital to produce new revenue. And I don't know when that'll happen, but when that situation occurs, you will hear it from me. I will be loudly pressuring everybody, other shareholders, management, be like, they should do buybacks. What I wouldn't mind right now is a very tiny buyback program that is exactly the same size as the stock-based compensation. That I wouldn't mind, but I don't really want to see that. I'm actually very happy with the dilution as it sits. It's very tiny. I'm not worried about it. I would rather they have every available penny for expansion into Germany and the US and Australia or whatever shows up.
Yeah. Well said. And the other thing is, like, another case study you can kind of look at for retail stocks that have implemented buyback programs that have worked out really well.
Dillard's.
There's plenty of them. Yeah, there's plenty of them. That's a more recent one, but more of on the legendary status, you have O'Reilly, right?
O'Reilly.
Exactly. So there is a place. Ulta is just on the doorsteps of that. I have no investment in Ulta, but we'll see how that pans out. And Ulta is trading at a much higher valuation. So, and just also for the record, O'Reilly also trades at a higher valuation. They're not the same exact addressable business model, right? Completely different kinds of retail, but they're both retail nonetheless. And you do also have Home Depot and Lowe's who have shown also historical success with well executed buybacks.
Tractor Supply Company.
Tractor Supply. That's another good one.
I mean, but we can't really compare High Tide to those companies.
No.
Guys. I know it's
High Tide's much
kind
smaller.
of wishful thinking that High Tide will at some point reach that stage, but it's still very, very far away from that.
No, but when they were, let's say, 30 years ago, O'Reilly, when they started their aggressive buybacks, or I think it was 20 years ago or something like that, the company was much, much, much smaller. And so it's more of like you've seen how it's played out on what it can do for returns. They also, you got to keep in mind that there has to be no deterioration in the business, because deterioration, that's a trap. And a lot of people fall for that. You've talked about that, where your followers have asked you to look at a company, they're buying back stock, there's no free cash flow. Yeah, that's a trap. You do want a business that has strong free cash flow and growing free cash flow. You have that with the coupled buybacks at a reasonable valuation relative to growth. That's a good, recipe. So for the time being, High Tide's not in that category because they do have a lot of reinvestment runway at the moment. It's just if that happens.
And a lot of uncertainty at the same time.
Eventually,
Not
the company might enter a phase where it makes sense to do buybacks, but we're not there yet, and we won't be for a while.
exactly.
Yeah.
Exactly.
I think it's only fair. We've talked about all the great things about High Tide. For the people that are not familiar with the company, or maybe even are, I want every one of us to share what you think your biggest risk is with High Tide. What High Tide's just general biggest risk is. Fiscal, would you like to start?
Could you repeat the question? I was reading chat.
What's the biggest risk to High Tide? Like what could actually cause the company to stumble?
Oh, okay. Well, I guess like Canada deciding to, for some reason, impose some kind of new regulation on or new tax or something on the cannabis industry.
Trump buys Canada.
I don't. Canada becoming the 51st state. I don't think that's
Yeah.
incredibly likely. But when it comes to thin stocks, of which I consider High Tide, BTI, Altria, etc., different governments like either deciding to go harsh on the regulation and tax is usually the top thing on my mind.
I don't want to copy you, but I think that probably is my number one. But I think to switch it up a little bit, if something, God forbid, were to happen, Raj Grover.
Yeah, that's what I was going to say. Like Raj getting run over by an independent operator who's desperate because
The
his
Oracle
business is going bankrupt or something.
Yeah, that'd be rough.
I would worry about somebody with amazingly deep pockets trying to copy the business model, and I mean like amazingly deep. Like you better be actually named Warren Buffett or actually named Altria Group to have enough money, because you're going to have to hemorrhage a lot of losses to copy and replicate what this company's already achieved to compete against it. And so the question is always, could somebody throw like a really large pile of cash into building something that is slightly better and could compete against it? And I think the answer is still yes. But it would take a huge pile of cash, and it would make a whole lot more sense for them to actually just step in and try to buy High Tide or buy a controlling share in High Tide and get somebody on the board or something like that. And so I sort of view that the actual risk is not true competition, but like what got mentioned, some sort of internal failure. Like if Raj was unable to make good decisions or unable to perform. He's also surrounded himself with a rather competent team. And if anything were to happen to the entire team, like let's say they break up, they lose their cohesion, or maybe a couple of key members of the executives, they leave or something, and they sort of lose that secret sauce, that magic in a bottle that they have right now. When you look at like a musical band, like let's say you look at Nirvana. The people in Nirvana, those three musicians, nothing was all that amazing about them as an individual, but you put the three of them together and you got lightning in a bottle. You got one of the best bands ever made. But as individuals, not that amazing at guitar, not that amazing at drums. They're good, yeah, but they're not like, the world's greatest. But you put them together, it's PB&J. It is a Reuben. All the ingredients don't have to make sense individually, but when you combine them, you get this awesome flavor package. And I worry something as bad is going to happen to the flavor package, or I worry something as bad is going to happen to Raj. And I feel like they're going to keep making good decisions unless that gets broken up, unless the dream team, separates or something like that.
So if Yoko Ono comes in, and
breaks up the band, yeah. Thankfully, Raj's wife is the biggest barnacle. She believes in him wholeheartedly. When I looked more into like her shares and stuff, I would love a little more clarity on this, but I'm sort of under the impression nowadays that she gave him money all the way back in 2009 to start his business 15 years ago. So she believed in him way back then. And that would many spouses believe in their spouse. That makes a whole lot of sense. But you want to ask me who's the biggest barnacle, who has the highest conviction in Raj? It's probably his wife.
We need to get his wife on the show sometime. That'd be a nice little
That'd
spin-off
be nice.
episode. We don't want Raj found his wife.
He has earned my conviction, right? Yeah. And that only took a few years. She's been married to him for way longer than I even knew he existed.
Yeah.
So Do you want to address the latest Hans comment?
The Hans,
Well, I
Hans
don't-
making a name
Han-
tonight.
This is hilarious because the okay, so the fairly easy one to address first is the brand loyalty. Do you guys have brand loyalty? Do you know anyone has brand loyalty to like Walmart, or do they just go to Walmart for price?
Yeah, and it's close.
Because Walmart is a
Discount retailer.
retail,
Scary place.
exactly, right? So I don't know, again, it's like getting back into the discussion that I think is prevalent on both Twitter, both I guess in the comment sections, this confusion. I don't know what's going on. I really don't. Because he's from Australia. I know Hans. Hans comments on my channel all the time. So Hans, in English, High Tide is a retailer. That's 10,004 or something.
So that's not the brand of weed. It's not High Tide.
No.
I'm
No.
confused.
It's not the brand of weed.
They do own some house brands, and they are trying to develop more of those. And
So
I
they
think
got great
that,
value
that
on the show.
going
got
forward in the future, they will, and that this will push gross margins up. Like,
So Kirkland,
yeah,
great
yeah,
value.
yeah, yeah.
What retailers do. Okay.
And
Just
yeah,
like-
Walmart has how many of those brands? Like 5 or 6. They got Equate. They got all those. And like you mentioned Kirkland. I hear Kirkland makes good good clothes, and they're comfortable, and they're just Costco.
Also,
Yeah.
Kroger's got some good stuff. Like they have like a one called Private Selection. That's pretty good.
Yeah. So High Tide's busy doing that, and the Queen of Bud acquisition has worked out fantastically. And I hope that they do more of that, and I hope they develop more of these in-house brands and stuff. And like, I don't expect it to happen like soon over the next year, maybe not even over the next 2, but I definitely expect gross margins are going to push back up into the low 30s eventually. As they oh, here we go, talking about margin.
Pull it up.
So go ahead and zoom in on that top one first. So here's the margins over time. We can see the write downs. We can see that first write down on the far left, that was the CBD. The second write down, that was last year, that was the websites. This year, the write down was ultra small. If you guys remember last roundtable, I was like, I don't really see any segments that are under stress. This is also why I want Raj to talk about each individual segment for like a sentence, is because I sort of want updates on these segments that even if they're not doing well, I still want to hear, our websites continue to struggle. I do want to hear the bad news, that sort of thing. So because I view gross margins as a company's ability to overcharge customers, right, and every other margin as a form of efficiency. Ryan, if you could head on down to the chart below this. Here we have adjusted EBITDA. So I have knocked out the one-time expenses, like from write-downs and stuff. And so those are my values for adjusted EBITDA. So you can, I produce those, not the company. So I can tell you I produce those ethically. Operating income and free cash flow when compared to gross profit. So I view these as efficiencies, right? So a measure of efficiency. As the company scales, their flat costs will remain relatively flat. They'll grow a little bit, but they'll remain relatively flat. And the revenue will continue to scale up. And so we are going to see the benefits of scale hit this company, and we're going to see all of these values push up toward 100, right? Because this is in comparison to gross profit, right? So it is possible to get numbers like up in the 70s or something like that, because this is how much of your gross profit goes into advertising, how much goes into paying for labor and administration and selling expenses. You got rent, you got all of this other stuff that eats into that gross profit. But as the company scales up, as the revenue grows, as they produce more stores, the benefits of scale, we are going to see that on this chart slowly over time. Assuming you guys are still with me, 3 years from now, and we're still doing this chart will continue to change over time. And we're going to see this chart warp up over time, I believe.
Yeah. Andrew, not A Money Marshall, but he comes in on how he asks on how High Tide may perform in a Canadian recession, which is a very good question. We've not been asked.
So they already proved that they did really well in an inflationary environment.
And I want to say that the Canadian economy has been relatively weak for quite some time at this point. The consumer's been relatively weak. There's been a separation, a delineation between the United States and Canadian counterparts for 6 years or so. I remember even when I worked my corporate job, my Canadian compadres, across the border were complaining about their pay you're not supposed to ever talk about pay, but we shared like even compensation, and then, but it wasn't that, it was compensation relative to living costs, which is important because it's all relative. If I'm getting paid twice as much, but my living costs are twice as much, we're in the same place. But it was comp relative to living costs were horrendous. And so they're already kind of a squeezed consumer over there. I know still a lot of Canadians that I speak with in Capital Mindset that are also telling me something similar. Not really regards to themselves, but maybe regards to people they know, acquaintances, because really if you're filtering out investors, right, you're really filtering out a lot of people who may not have disposable income in the first place. So of course, if I'm talking to Canadians who are investing, they have disposable incomes, and they have on top of that, to meet all their expenses, discretionary expenses, they have investable income. So you are filtering out a lot of people. But when you're talking about the average consumer in Canada, it hasn't been strong, and HITI's been doing fairly well, is what I'm getting at. So while they don't have like a great recession, if that's what you're going for, I think that's the spirit of the question. Retail for discretionary items, in theory, does suffer. For consumption, such as MJ, you probably would argue this, that mom and pops who have a higher price, which, by the way, Hans, for you out there, by the way, I like Hans. Me and Hans, we talk a lot in a comment section. He's always very commentative. The point is, yes, the customer does care about price, and they will go for the cheaper price, and high tide is the cheaper price. So we do argue what you're arguing, but I don't know the disconnect there. And in a recession where you might say it's even tighter, let's say, and you're trying to consume something because you want to let go, you want to relax, you probably won't go for the store that has the higher price. You're probably going to go for the one that has the significantly lower price. And again, anecdotally, when I've spoke to people in Canada who visited High Tide, it is materially cheaper to go to a High Tide store than to the one that they were going before. And in fact, one of the ones I was speaking to months ago who went for the first time, he didn't even know this company existed. He doesn't go to any other store now. Says the presentation is much nicer, the price is materially cheaper, and they have anything of all the selection. And by the way, he signed up as an elite member.
That's all I needed to hear. I'm buying more.
Yeah. Yeah.
So
the bomb
about the recession thing. This company sells a mood enhancer. And, similar to like alcohol or tobacco, I would view it as fairly recession proof. And this is why. And the fundamental core reason has to do with human behavior. During hard times, so read that as light and medium recessions, because during really nasty recessions and Great Depression, all rules go out the window. But during hard times, people buy more cheap emotional pick-me-ups, not less. Donuts, lottery tickets, cigarettes, alcohol, and cannabis. People buy more cheap emotional pick-me-ups. If it doesn't cost much and it makes you feel good now, and you can forget about the fact that the economy is crashing and everyone around you is unemployed, people go buy that stuff, and especially during hard times. So I expect light and medium, moderate recessions, companies should do just fine.
I agree with you guys in what you said, but I would expect High Tide to suffer at least just a bit, because the illicit market would probably continue ramping up. Because we are the cheapest one by far, but it's only when you buy ounces, basically. And if you don't have money, or you have a very low disposable income or something like that, you cannot always afford to spend $100 in an ounce of cannabis. So you're probably going to try to get an illicit seller, and you can buy 1 or 2 grams at a time or something like that. So I understand your point, and I agree that it wouldn't be a dramatic scenario, not whatsoever, but it would definitely hurt High Tide at least slightly.
Maybe. I think in the short run it would, but on the flip side, if it bankrupts some more of their competitors, then they scoop up that market
Yeah, exactly.
share, and it turns out better for them on the other end of it, right?
That's what's happening right now.
True North just
even without the
3 weeks
severe
ago.
recession.
40 more stores. Another one's down. This is the apex predator of the industry. This is the last survivor. Canada is the scariest jungle, and this is the apex predator that comes out of that jungle. This is why I'm here. Right? I did a top-down analysis of the entire industry, and I said this is the most competitive business model. This is not a winner-take-all situation. This is a winner-take-most situation, and this is the company that's going to take everyone else's candy, and there's nothing they can do about it. And that's what I've been watching that play out for, 3-4 years now. And that's what I see, and that's what I continue to see, and that's why I'm here.
I didn't know that U.S. cannabis stores had to hold like a certain amount of cash. I learned from Brett. It's like something stupid. It doesn't make sense for them to go in if like
they're not allowed to
like
participate in our banking system.
Yeah, it's called safe
Federal.
banking. They're not. Yeah.
And yeah, if it's not federally legalized, they can't do it.
Yep.
So like I watched somebody give a tour of Planet 13 in Las Vegas. Huge store, would be a wonderful place to visit. Horrible business model, but they walk you through the tour of the place, and they show you all these outrageously expensive novelty things that they have there for people to do and experience. And then in the back, they show you the safe, and there's like literally $7 million in cash in the safe because they can't put it in a bank. They're not allowed.
Yeah. We'll go over some of the more charts that you sent to me, Blake, before we head out of here as we're approaching the 2-hour mark. This is the German cannabis imports by year in kilograms.
I did not realize just how attractive an opportunity this was in Germany until I looked at this chart. This screams to me, man, demand is just going up every year. Every year. Demand in Germany is just going up and up and up. And this doesn't include 2024, where they laxed the rules, and now doctors can prescribe it like much more laissez-faire. So the amount of patients in Germany has gone up dramatically in 2024. This chart only goes to 2023.
Yeah, me and Fiscal always love to bring up the GDP comparison of Germany's literally 2 times the size of Canada, and look what they've done.
More than
It has about twice as many people, and it's about twice the economy. So and there's a higher population density there, right? So Canada has a whole lot of these small towns that are spread out like, half an hour drive apart, and it's just farmland in between. And even then, those towns are tiny, until you get into the actual cities. Germany has a bunch of medium-sized cities, a bunch of them, and they're all not that far from each other. And there's no one place in Germany that's that far of a drive. Remember, like when I first pitched this to you guys, to Fiscal and Ryan and Capital, I was talking about it's a trade-off with how far are you willing to drive to get to the discount. As from the consumer's point of view, is it worth it to drive an extra 5 minutes or an extra 10 minutes? Well, in Germany, you got the Autobahn. In Germany, it takes less time to get from one side of the country to the other. It takes less time to get from one city to the other. And so I really think a company like this is going to have huge unseen advantages just because of the way the demographic profile is laid out over the country and how awesome their infrastructure is. And the fact that it only takes like, I don't know, an hour and a half or something to drive all the way across Germany. Let's ask the one European. How long does it take to drive across Germany?
I mean, I have no idea, but it's more than that.
More than that. Okay. I will look it up on MapQuest right now.
You said how much time you said?
I was picturing like an hour and a half, 2 hours.
Germany's bigger than most states, and most states you couldn't get across.
Yeah, it's way more than that. It's not even like enough to cross Portugal.
It may look small on like
there's no.
I'm seeing 10 hours.
Either.
Yeah, but even going like 100 miles or whatever per hour, it would still take, I think, more than.
Oh wow, okay, it's much bigger than I was looking.
Yeah, the Mercator projection
large country
for maps makes it look a little smaller than it is, I think.
That's because Europe is shrunk.
Not a grower.
Yeah.
Yeah, El Guapotron has it right. I must drive 420 miles an hour. That's what it is.
Yeah. Blake, you also sent me this with True North.
Yeah, True North. It seems like every 4 to 5 months, another competitor has to declare bankruptcy.
Yeah.
And this has been going on for 2-3 years now. It's just a steady stream of medium-sized chains that their story ended with they got crushed by their own lease agreements. This seems to be the reoccurring theme here.
Yeah, as I've mentioned before on here, we have an area of town where there's a ton of cannabis stores that are just consistently coming and going, and clearly not the case with the high tide.
Yep. But yeah, Germany is very heavily urbanized, though, to Blake's earlier point. Like, I think everybody can name at least 2 pretty good sized cities in Germany, if not more.
Yeah.
Well, and the company already trades on the Frankfurt Stock Exchange.
Yeah.
So, and they have for years. You know, they've been clearly planning this for a long time. They knew they would eventually move into Europe, that Europe would eventually open up, those doors would open, and that they would need to already be pre-positioned on the Frankfurt Stock Exchange.
We will give the 2-minute warning to anybody in the comment section that has any last comments, questions, or concerns regarding the High Tide Roundtable Part 3. Do any of the 3 of you have anything else that we haven't addressed so far tonight that you'd like to bring up?
Let's maybe forward allocation if we have any plans.
Oh,
forward allocation. You mean how I'm going to sell some real estate and then buy
Yeah.
some other real estate, and then
Yeah.
somewhere in that process, I'm pretty sure I'm going to end up with a pile of cash and nowhere to put it but high tide.
Yeah. Yeah, because I think in this panel, I think I'm the lowest allocation by far. Which I'm here only in ceremony, effectively.
Although our nominal position size is actually pretty similar, though. But your allocation is much lower because you got the big boy port. So yeah, I'm pretty comfortable to just basically let it grow from here, and if it ends up being like 50% because the business is just doing that well, I'm not gonna sell it if I don't think it's overvalued, basically.
I've been averaging recently. I recently bought the dip at like 265, so probably around there would have to get to add more. But I mean, I'm for sure trying to make it a 7 to 8, 10% part of the portfolio. I got to keep in mind that there's going to be a good amount of gains potentially in the future too, which I mean, I have to kind of confront that at some point. So I'm happy where it's at, but there's still room for more.
So I own 18,000 shares at 180, as I said. And I said it was 29-30% of my portfolio. But if you look at the cash invested, like per position, it's actually more than that, because High Tide has been like my laggard in my portfolio. Like I have HIMS, which is now with close to 400% returns. I have Rocket Lab, which is like 500 and something percent. And then I have another recent position, Nebius.
Cunha, I need you to tell me the next time you're buying something, by the way.
Yeah, I just got in recently in Nebius.
NBIS.
Yeah. I'm with just 24% returns right now. I'm expecting much more. But essentially what I'm trying to say is I might trim High Tide a bit. Not right now, but I mean, it's depending on what happens, literally. And if I see any other stock I want to own, because I own like 4 stocks and it's like my entire net worth, like just 95, 96, or even 97% of my net worth. So as my portfolio is growing to a significant scale, and even a scale I wasn't expecting to reach that fast, I want to be more comfortable. Let's say I'm pretty comfortable. I never had a sleepless night, but I want to own like more opportunities, because I'm literally doing this every day. I'm like analyzing new stocks, analyzing new ideas, and trying to do it like kind of full time. So it's really annoying to me. First, I'm with zero cash for like a long time, because in 2023 or late 2023, I kind of sensed the bull market that was forming, and I literally went all in at that time. It was in iTide and HIMS, as I said. Then during 2024, I bought Rocket Lab, and now in the beginning of 2025, I bought Nebius. And to buy Nebius, I actually had to sell 2,000 shares. I had 20,000 shares of High Tide, so I trimmed a bit at 3 something. I don't remember, but I want to at least keep 10 or 15,000 shares, which still represents like in terms of cash invested total positions like 30%.
Nice.
And nice. I'd like to address this comment because that's fake news. I have never smoked once in my life. I haven't drunk at
I
all.
actually haven't either, believe it or not.
Yeah.
I know that that might come as like a slight surprise, but yeah, it's true.
You guys know me. I only indulge in Philip Morris products. Do the math.
I only indulge in high quality compounders.
Well said. Yeah, well said. Well said.
Yeah, I don't even drink, so
Real
I
man.
actually found out a couple years
Anymore.
ago. I
With-
I have
Yeah,
no
occasion.
comments about
I
this.
found out a couple years ago I need to drink more, like for my heart health. Like my wife is showing me the studies, like you should start drinking red wine, and I'm like, I already have like
I do
8
that,
glasses
yeah.
of whiskey a month.
The Surgeon General recently came out though against that.
Against whiskey?
No, against any. So basically, there's a couple medical studies came out saying there's actually no safe dosage, and there's
For
actually
alcohol?
and there's new
Yes,
links to like
That is true.
Okay,
cancer.
so I guess I'll just keep drinking like 1 to 2 drinks a month, which is like almost zero anyways, and I'll be fine.
Yeah, it's kind of interesting because we're seeing, at least in the States, we're not talking about alcohol stocks, but they're all doing bad in the new generation, especially.
Oh yeah.
And it looks like the governments in some jurisdictions around the world are going to come after them like the cigarettes.
Yeah. Well, if you look at like what the high schoolers are doing and the 20-year-olds and stuff, they're not drinking alcohol and they're not smoking cigarettes. They switched to vaping.
No.
They're vaping to nicotine and they're vaping THC.
You should come to Portugal to see.
They're doing none of the things that were cool when I was a teenager.
I don't know. People are still drinking. They're not smoking darts, but like it's definitely a lot of alcohol. Zins are pretty prevalent.
No, but I saw that study like saying that now Gen Z, I guess, it's really spending like much less money in alcohol, like compared to the previous generations.
The parents are buying it then.
Yeah,
Bunch
probably
of pussies.
probably because the
Bunch
marketing
of
is too
pussies.
problematic for them or something.
Well, probably because cannabis doesn't cause hangovers.
I mean,
no.
Yeah.
definitely
know.
better.
It also has an LDL 50 where like the lethal dose is like more than you can consume.
Ah, yeah.
So when
absolutely.
people talk about, oh, it's a sin stock, you know, it'll damage people, I'm thinking to myself, I'm like, yeah, but I'm still, you know, we've been consuming it for like 8,000 years and I'm still waiting for somebody to die from it.
It's impossible, man. You need to smoke. And I mean, I can say that during my college times, I was a somewhat regular smoker, and some of my friends were like daily users and all that. And I mean, if you're a daily user of alcohol, you ruin your life. And if you're a daily user of cannabis, at most, I mean, you can be addicted to THC. People say you can't, but you really can. And unfortunately, I know people that got really addicted and that caused some problems for their lives. But I mean, I also know people that smoke daily for many years, and the only bad thing that it does to them is like not being that much productive in their daily like routine. I mean, they don't. It's not like alcohol. If you drink every day, I mean, you end up ruining your family, like spanking your wife and doing.
I mean, some of us do that anyway.
Guys.
If you're stoned, I mean, your wife spanks you. At most.
Yeah, don't drink, guys. You'll end up like the tactical stock scalper. You don't want that.
Yeah, that's what alcohol does to you over the long term. Obsessive abuse.
So I feel like we're winding down. What do we expect to happen next quarter? Does anybody have any predictions? The only prediction I have is that it's winter and revenue might actually go down. The other prediction is that Raj hinted that this is a multi-pronged attack into Germany. And so I suspect between now and the next earnings report, we're going to get a second piece of news.
I was thinking the same thing.
But yeah, by multi-pronged, I don't know if this is a 2-pronged attack, a 3-pronged attack, 4-pronged attack. I don't know how many different ways he's trying to get exposure to Germany, but he basically told us he wasn't done. This is not the only way we're getting into Germany. We're doing it multi-pronged. And I'm expecting news. I don't know what the news will be. I'm just expecting news between now and the next quarter.
Yeah. big Germany developments is my prediction as well.
But next quarter is soon, right?
Yeah, it's like a month and a half or something.
Yeah, exactly.
It's pretty quick.
Last year it was at 15th of March. So
March 15th. Okay.
Yeah.
Oh, so only like a month away then.
Yeah, exactly.
High tide round.
Usually from
Well, maybe I'm jumping the gun. Maybe I mean over the next like 5 months. At some point we'll get news soon on Germany.
Yeah.
Another round of news.
They probably beat earnings, but the stock goes down. It's pretty easy assumption to go for. I mean,
yeah,
nothing creative.
How about that? The stock went down before earnings this time, and then right after earnings there was the massive AI panic.
Yeah.
And everything on the Nasdaq went down, and then high tide like immediately recovered.
And then the tariff panic.
Then the tariff panic. Yeah.
And then the tariff are on pause. Pump.
That was.
I'm gonna tariff you. No,
that was very special.
That was unusual. We seem to have bucked the trend. That doesn't mean we're not going to go right back into it next quarter, but this quarter was different.
Yeah. Well said. Well, ladies and gentlemen, we have passed the 2-hour mark. Now is a good time for the three of you to start self-promoting anything, shilling anything. I don't know, whatever you guys want to do. Blake, do you want to start? Where can the people find you?
Sure. You can find me on Seeking Alpha, and you can find me on Twitter. On Seeking Alpha, I do not write very many articles, mostly because I'm busy, full-time job, all that stuff. I am getting back into writing more frequently. I am about 40% through writing an article on high tide as we speak. It'll probably, I don't know when I'll have time to finish it, maybe later this week. You can also find me on Twitter. On Twitter, I basically talk about only this company. I also used to be part of a podcast that seems to have fallen apart. So I'm actually looking for a new podcast. So if you know anyone who wants to talk about stocks with me once a week, we can talk about models, like maybe we do an everything money thing where we find one inexperienced investor and then pair them up with a bunch of experienced investors that are teaching them stuff. Or maybe we have like a Shark Tank thing where we have guests that come on and try to like pitch us stuff. I don't really know. I'm open to a lot of ideas, but I am looking for new co-hosts.
Potential drama stirring up on the
thing.
Oh, we just
great returns.
We just had too many scheduling issues. All three of us were super busy, and things just fell apart because, like, scheduling is the big problem.
Well, I'll reach out to you with some thoughts, Blake.
Cool.
Yeah, we will. Yeah.
I need new co-hosts.
Anything could happen. MV, where can the people find you? Obviously, Twitter is linked in the description, but where else can the folks find you?
I mean, for now, it's just on Twitter. Yeah, MVC Investing.
Give me Elon bucks, everybody. Give me Elon bucks. And then Fabio, where can the people find you?
Social medias and your servers.
Yeah, I come for income, everybody. That's live it, learn it, love it. Thank you all for watching. 2 hours, 2 minutes. Very exciting chat tonight. Want to thank Stabulo, Hans. We tire on dividends. Always seen, not acknowledged this episode. Guap, Guap, Roberto, Dan, Lincoln, Echoes. Oh, we forgot the dance fiscal. We gotta do it before we head off.
With the membership and super chat.
Yeah,
one for just everybody.
Who's
yeah,
the
one
new
for
member?
everybody.
What's
we have
the
the new member.
thing?
We tire on dividends. Got the new membership.
Yeah, it was a gifted
okay.
membership right
Okay.
at the start.
so
Yeah.
coincidence, right? All right, 3. You can rather choose to dance or not. It's your decision. So
He just wants to see you dance. That's why he's
yeah,
signed
it's
up.
fine. I love it's only us doing it, dude. This is great. That's enough.
Any more than that, and
I
we
love
get
how that was
copyright
just
claim.
us. That made it like 10 times more funny, dude.
Just wait until 2 months from now when he cancels his subscription and then resubscribes right in the middle of a stream just to make you dance again.
Oh shoot. Oh, we got to do it again now. Thanks for the $5, Guap. We appreciate it.
We'll just say that was a tip for dancing. And
That was a tip for dancing. Yeah, that's enough. Once again,
I want to thank Guap. He was one of the like half a dozen people that got me to pay a little bit closer attention to high tide at the critical moment when I could have stopped paying attention to it and shifted my attention to other companies. He was one of the half a dozen people who were like, yeah, but the CEO, he's so sharp. the business model, it's developing. Guapo was one of those people who he has a long-term vision, and it's also based off of human behavior and incentives.
Yeah.
And when he gave me the pitch, similar to how I gave you guys all the pitch, there was something there that resonated. So I want to thank you, Guapo, for several years ago being one of the ones who got me here.
Well said. And thank you, Guapo, for $5. Hopefully someday you'll be able to come out of the cash flow kings. We know that.
We always know
Restrictions.
there's
That's all I'm
another-
gonna say. You know,
There's always another roundtable next quarter. You know.
yeah, there's always next quarter. But thank you once again. Thank you for the three of you for coming on once again. Another very successful, enjoyable, and prolonged cash flow kings high tide roundtable part 3, part 4 in a few months. So we'll see you all then. Thank you for watching. Smash the like button, subscribe, do dividend, stocks, not drugs, and of course, cash flow is king.